Hello everyone, Tom Staub here with Red Oak. Going forward, we're going to be doing these monthly updates, both video and through the email with our summary content. Again, we have a lot going on with a number of deals, and so it's important to understand what we're doing with each project. So today, before I get started on all the deals, I want to give you a view of how I'm seeing the market with all the up and down volatility that we're seeing in the market. So a few things to note. Today, as I talked to you, it's the end of September. You're looking at 30-year fixed mortgages in the 6.75% range. And if you recall, about 2 quarters ago, we estimated that around 6.25% to 6.5% 30-year fixed is where we would really start seeing the pullbacks happening on the buying side. And now that we're getting past that number, we told you all by 7% 30-year fixed is when we would start seeing substantial pullbacks in home prices. Now, after talking to many builders, working with our in-house economist, we do foresee a pullback on prices happening. It depends market to market on where you're at. But generally, we would expect somewhere between a 12 to 15% pullback over the next 6 to maybe 9 months. Now, again, that could change depending on what happens with the Fed and everyone else. So, however, it's important to note too that a lot of our projects, if you're an investor in, are not going to come to fruition until 2024, 2025. Okay, so now what I just mentioned is for the home builders and more or less what we're seeing with supply of homes. Now, generally, if you look at the inventory and supply, what I suspect is happening and what I think will continue to happen, builders, by the way, are savvy from 08 to 2010. They realize it is not prudent to build huge inventories of supply on the books. And so if you go across neighborhoods that are being developed, what you're going to find is a lot of these homes are at basically framing stage and they're just sitting there. And so a lot of the supply numbers that we're seeing in the market include those houses. Builders are not going to continue those houses unless they see an exit in front of them. Okay, they're going to offload their inventory as fast as they can in the near term to offset any risk in their portfolio. Now, so what we're going to see is you're going to see the supply versus demand on homes go up in a blimp and then come back down as they begin to offload their inventory. And I suspect what's going to happen is that while buyers are reducing in quantity, so will the supply, and the idea of a major crash will not happen. Now, what I actually suspect to happen is that coming out of this recession, I believe we're going to have less supply than we had going into it. So while prices will come down over the near term, once we come out into the upside or into a bull market, I believe you're going to see price escalation be even faster than it was coming into this recession. So that's on the house side. Again, the Fed is fighting the issue of inflation with demand solutions, and it's really a supply issue. So we'll see how that goes going forward. On the lot side, I always push the idea of lot supply index. Zonda has a great chart that talks about our lot supply index. If you look at where we're at today, we're actually at historical lows. What does that mean? Well, builders are still seeking lots for their future building. And I get calls every week, several calls a week, asking me if I have any lots available for them to take. Paper lots, which means fully entitled, or fully improved lots. And so I see a lot of headwinds for builders in getting inventory of buildable lots. That will continue. So that's good news for developers that are building lots because there's not much out there. Also, to be told, many of the builders are being told from their corporate headquarters to stop self-development. Now, in the past, builders have done a lot of the development of lots themselves to ensure they have buildable land for their homes. Well, as a risk hedge, they're being told to only buy from developers going forward. Well, in a market that's already on a 3-to-1 demand to supply ratio, that's only going to put more pressure on lot prices and lot availability for builders. So again, mostly good news for developers if you're in the right markets, such as a Dallas or an Austin, Phoenix, I can't speak to, but the hot markets everyone is moving to. And so generally, I still see really good times ahead for developers. Again, most of our projects are 2 years out when we should probably be out of this recession. Now, going into our projects, there's a number of deals here that we'll talk about. The first one is Meadowview Estates. Again, not every investor here has been part of these, but I'll give you the quick rundown. Meadowview Estates was our 54-acre project near Lockhart in Luling. We are fully approved on that, and we list those lots as seller financing lots in the next 2 weeks. And as expected, we'll begin to pay back investors in the next 6 months. As we sell the lots, we'll begin to pay back investors, and then we're going to hold onto those lots as seller financing. And we have offered investors in that deal an opportunity to stay in the deal and collect cash flows at an 8% pref. Willow Ranch, which is Lockhart 89, a lot of good movement there. That property is actually a property in our total of 1,200 acres. So 424 lots that we're developing there. We will have the prelim plat approved in October, so next month, which means we then go to construction planning. So construction plans will take about 4 to 6 months. So that'll carry us through about April. We should get final approval on those lots come May, maybe June, which means we can technically start construction on those lots in April. We expect the first phase of lots to be delivered end of 2023, early 2024. And again, right now we have finalized those contracts with the builders. No one's backing out. We had the numbers baked in there, so things are looking pretty good on that project. Going down to Temple 75, Bell County and the city of Temple have been absolutely amazing to work with. We have finalized our concept, which has been approved. That is about 2/3 of the land will be single family lots. 1/3 will be a multifamily development. That's another phase for investors. And for you all out there that are part of that deal, you'll have the first right to invest in the second phase. And so more to come that, but it looks like we'll have our final approval on that one for the PD in October as well, which means that, again, we'll probably have final plat approval on that one come April, May, construction starting around that same time frame with an early 2024 delivery of phase 1. Seguin 80. So beautiful piece of property down there in Seguin, about, again, 40 minutes or so southwest of Austin. So that property, all looks good. We have been working through a number of design concepts. Again, we closed that deal in April, so still very early on. Some good news there. We have seller financing on the land until October of next year, right? We have essentially 95% of that land cost covered by seller financing at 6% debt. So very attractive. We're going to hold that as long as we can, and potentially, if we need to, even extend that for another 4 to 6 months to keep our cost of capital down. So looking very attractive on that deal. 330 lots, down from initial 370. We had a drainage issue that we had to correct, and it did eat up 40 lots, which is a pretty big hit. Even in lieu of all that, we have pivoted from selling a piece of that as papered lots, which again is just fully improved lots, not improved lots, to now selling all the lots as fully improved. So initially our profits were about $6 million total on the deal. With this pivot, we're going to make about another $1.5 million on this deal, which is good news. And again, a lot of the investors on this deal are profit share investors, and so good news for them. Now, the one headache that we have on this deal, unfortunately, is water. So we did come into a hurdle here. Water is delayed a bit. So there's an issue with the city dealing with one of the providers. They're finalizing that agreement as we speak. So in our risk analysis, we are expecting a 6 to 9 month delay, which means cost of capital is going to go up slightly from an equity or from a debt standpoint. So the good news is there's no harm in delaying some of the deals as we get through the recession. So we still do expect final plat approval end of next year, early 2024, which means construction starts probably in 2024 with the first phase of delivery end of 2024, early 2025. Okay. Again, beautiful piece of property there. One of my favorites that we have in the Austin area. Flagstaff 14. So for you of those that are investing in the Flagstaff deal, 13.8 pristine acres of land in Flagstaff. It's probably the prettiest site that we have across all of our deals. These 13.8 acres, a lot of topography. So we're going to utilize that topography to create stunning views of all the properties that we're building there. That is a ground up development deal. So we're going through entitlements right now. We close on that in December. So we'll have the land in December. The good news is we've been doing all the engineering for the last 4 to 6 months, right? So we're already ahead of the game in terms of engineering. One of the benefits of having an in-house engineering team. And so when we close in December, we're already 6 months of the way through an 18-month timeline for entitlements. So we expect to have full plat approval end of next year, right? End of 2023. We break ground probably January to March of 2024. Horizontal should take about 6 to 8 months, which means we start building the actual homes end of 2024. We're going to build 60 luxury townhomes there, pricing in the mid-8s to mid-9 range. 3-story vertical townhomes, about 1,800 square feet apiece with 1-car garages. Heavy on the amenities here. We're going to incorporate all the nature in the neighborhood as part of the layout. So really big margins on this deal. We're very excited for what we're going to build there. I myself, I'm going to be buying one of the units, so it's likely going to be a destination community where a lot of people who own there will own it as a second home. Okay, so again, there's no inventory in Flagstaff, so we think these will pre-sale really fast. Again, we'll see where the market is, but that's where our intuition is telling us. Lockhart 250. So this is one of our major communities that we're building, and we just had our all hands offsite today in the office. One of the things that we're promoting is something called strong towns philosophy, right? It's this idea that we're really trying to create large communities in one location that are rather self-sufficient, right? So medtail, medical offices, commercial, townhomes, a variety of home products, schools, the whole nine. Lockhart 250 is one of our communities where we're going to have amphitheaters, all that I just mentioned, an elementary school and the whole nine, probably about 1,000 lots, 10 acres of commercial, and some medtail in there as well. So very excited. That's in southwest of Lockhart and Luling, right off the 80 and 130, about 8 minutes from the rumored Micron site. So that's going really well. We're actually looking to expand our land footprint there to even grow the community bigger. But we've made great progress on the mud. We made great progress on the sewer plant, and generally we're on time for our entitlements there. We're still in the process of raising capital for that, and as of right now, we are hitting all of our timeline milestones for that project. For the builders out there, we have not yet secured any purchase agreements, as we're still finalizing sort of the lot dimensions of that community, but that is coming up here in the next few months. So for now, that wraps up our active deals. We have 4 more deals on the horizon that we're closing in the next 3 months. As we begin to close those deals, we'll be including those deals as part of this update. But generally, we're tracking really well on most of the projects. Again, there is obviously some turmoil in the market. We are seeing some volatility in rates. It is scaring the buyers. We have our finger on that pulse, but our deals are still 2-ish years out. So generally, we still do not see much risk in our deals at this point. We're well capitalized. Our engineers are on top of the entitlements, and generally, operationally, we are on top of our tracking for many of the deal components. So as of now, good things as far as we can report. We will get back to you next month with the update, and look out for our economic report that's coming out here in October, and we'll get you up to date on that in the pulse of the market. Thank you.